What is up, everyone? This is your host again, Limitless, back again with another episode of Limitless Talks. You know how we do. This is that show where we talk about politics, economics, and propaganda. And guys, a lot has been happening. I know a lot of people are looking at the market right now, and yeah, there's blood in the street, but it's nothing to worry about. We know the market is manipulated. It's a casino right now. The aim is to bring everything down in order for the fourth industrial revolution to rise. And once we have that in the back of our mind, we understand exactly what's going on. It's a shift. That's what's going on right now. But let's get over to the fun article first. We've got right here: a robot vacuum cleaner escaped from UK travel lodge. It could be anywhere. Guys, we're not even the new phase is not fully here yet, and we got these AI systems already getting out of control. Guys, I don't even know like what to say about this too tough. Like it's just it's amazing. A robot vacuum cleaner escaped from a UK Travelodge hotel having failed to stop at the front door. You see, this is just rubbish article right here. There's an element of truth to it, but all in all, it's a rubbish article. You got words like escaped, failed to stop at the front door. Like what's that about? like, anyways, guys, we got a lot to go through today. We'll go through some tips and tricks in terms of understanding the market and what's happening, because a lot of us, we get nervous when we see the reds, but hey, whatever goes up must come down. Anyways, let's hit the intro and then we'll come right back. Welcome back, everyone. This is your host, X Limitless again. Please, please, please share with your friends, family, loved ones, your haters, because they need to see this. We're moving into a new age, fourth industrial revolution, whereby human labor is no longer required in the economic activities. So we're gonna have robotics, algorithms, drones, artificial intelligence in general, that will basically be undertaking a lot of these economic activities, and humans will be sidestepped. So, looking at the market right now, if you look at both stock and crypto market, you can see here the US stock, Dow Jones, S&P 500, Nasdaq, you know, you can see they're all down. The only thing that's up is gold. We know gold should be way up higher than this, but we know they're suppressing the value of gold, they're suppressing the price. Gold is actually scarce, believe me. When I say it's scarce, like for the amount of billionaires that we have in the world, billionaires and trillionaires, or and when we say people, I'm talking about persons. You understand what I'm saying? The persons, entities with trillions and billions to their names are not, you know, that it's impossible. We don't have enough gold to have that many billionaires and trillionaires. You know, it's just impossible. So right there, that tells you the price of gold is being suppressed. But anyways, if you look at Europe as well, you see the top 100 companies on the London Stock Exchange. It's it's down as well. So when we're seeing these things, we should understand that there's a there's a shift happening. The market is at all-time high. Everything is at all-time high, especially considering the lockdown and everything we've been through recently. Sorry, guys. And everything we've been through recently, gross domestic product for pretty much every single nation have gone down. You understand what I'm saying? Productivity went down due to the lockdowns and a lot of the stay-at-home mandate and self-isolation and quarantine and all that sort of measures they've put in place because of this disease that's going about. Now, guys, it's no brainer. You think the government would have assessed the risk of what would happen by taking these measures, which I imagine they would have done. And of course, they've done it, but they went ahead anyways and carried out this mandate, knowing well what the risk will be. So we're that's why we're where we're at right now. So moving on, we've got right here futures recover from Wednesday rout as yields VIX stabilizes. So guys, it's important we understand the correlation, you know, of the central bank bond yields and the VIX stabilizing, and of course the dollar index as well. So the dollar index, the yield, and the VIX, when those go up, you can expect the stock market to crash. You understand what I'm saying? Well, not crash, but to drop in value because yield is basically the return that investors that invest in the government bonds, which is issued by the treasury and controlled by the, what do you call it, by the central bank. When the yield goes up, then that means uh, that's the rate. That's what they mean by rate going up. So you have the you have the 5 year, 10 year, 20 years, 30 year bond. There's different levels, and each of them, the longer you wanna buy the bond for, the more yield you'll get in return, and the shorter you wanna buy for, the lower the yield you get in return. And currently, if we look at the Bank of England side, we know the bank rate is currently sitting at 0.25. So we got inflation at 0.54, which again, if anyone's bothered to look around them in terms of the usual product that they buy, the cost of energy they use, gas, electricity monthly, I can speak for myself. Uh, these things, especially my gas and electricity, has gone up by 30%. You understand what I'm saying? It's gone up by 30%. So it's it's important that we understand, and it's only gonna go up even further. So it's important that we understand the correlation between these things. So as the yield goes up, you can expect the stock market to drop because what do you call it? The the rate at which people can now borrow will be increased as well. So the interest rate on loans and existing loans, mortgages, stuff like that, it's gonna go up, which means you know the market will be squeezed even more tight. People people would be willing to let go of their asset to meet certain obligations. You understand what I'm saying? And the VIX right here, if you look here, the VIX is the ticker symbol and the popular name for the Chicago Board Options Exchange Volatility Index, a popular measure of the stock market's expectation of volatility based on S&P 500 index options. So we understand the correlation between futures, options as well. you know, when those things expire, you expect the market to take a dip. That's why it's important to follow the date for these things. So you get, a good heads up when the market will dip and when the market is likely to bounce back. So going back right here, if you look, so exactly what the VIX does, it's a volatility index. Uh, just the same way, the crypto has its fear index. So you can think of it as, fear index basically. So when the index goes up, you get, a drop in the market. So if we take, for example, the 2020 stock market crash right here, March, if you go to the VIX, you'll see exactly, you see the rise right there. You see the VIX also went up as well. So that matches the timeline that the stock market initially crashed. And this is not just, it's just the stock market in general. Both the London Stock Exchange, US stock exchanges and stuff like that. It correlates with both of them. Even if we go back in history and look at 2008. So if we look at 2008 right here, if everyone remember the 2008 crash, it's here. You see, that's exactly the same thing. You see, right here, 2008, boom, everything dropped into 2009. So, guys, we need to understand uh, the correlation between these things. So, moving on, we've got 3.3 trillion stock options expiration adds to Bloomberg market jitter. So, this is why we've got this big dip currently. You see a lot of options and futures. We had a backed future expiration, and then we literally, which was on the 20th, and then we had options literally expire the following day as well. So in total, we had you know, uh, an expiration of 3.3 trillion dollars of stock options expiring. So if you look down here and see the breakdown, uh, this is 1.3 trillion of a single share as a whole. You understand what I'm saying? And then 1 trillion contract linked to S&P 500, uh, and the remaining was in the crypto market. What's the article on that one? I don't think I put up the article on that one. But anyways, the remaining is in the crypto market. So now the reason why a lot of these options are expiring is because if you look here, we've got Netflix shares slumped by 20%. Uh, if we all understand, this season we're in, this Q1, Q2 is earnings season. So a lot of these corporations, not even a lot, all of them, they all have to disclose their earning in order to ensure the valuation of their company is, accurate, basically, according to the earning. So what we're having is a lot of these stocks, they've overshoot how much they thought they would make. So now, when when their earning data is released, the officials basically tell them, hey, your stock is overvalued based off your earnings. So, you gotta take a L. And that's what we're seeing happen right now, especially in tech stocks. A lot of these tech stocks, we know a lot of them, they're for the fourth industrial revolution, which means the customer is not there yet. So they're not really making the money they think they're gonna make as of yet. But we know once the switch is flipped, 100% all this tech stock for the fourth industrial revolution, they they are all going to rise. They will rise first before the legacy stocks, the Dow Jones and all that, before those rise after them. But a lot of this tech stock, we know they are overvalued. They are. You look at Tesla as well. Tesla have not sold enough cars to be worth, almost $1,000 per share. It just doesn't make any sense. Even companies that have sold more cars than Tesla, they're not worth $1,000 per share. So that right there lets you know uh, the market is rigged. You understand what I'm saying? These companies, they get money funneled through them via the central banks. So an example here, you see Peloton CEO says company is taking significant corrective actions, puts Q2 revenue forecast in range. So right, Peloton said its fiscal second quarter revenue will be within its previously forecasted range as it takes action to slash cost and improve profitability. So right here, you can see straight away, these guys, it's all of them. They're not meeting their earning forecast, which means they've overvalued their stock, and therefore it's gonna come back down. There's just no two ways about it. So in order for them to meet their earnings, and again, this is then a lot of them aren't meeting their earning forecast due to the coronavirus lockdown and all the different measures that were put in place. You understand what I'm saying? So what we're having is these guys are having to slash cost, wherever possible, in order to improve profitability. And another way they doing another thing they're doing in order to improve their profitability is by increasing price, which is causing inflation. Because right now, the Bank of England is telling us that inflation is at 5.4%, which is a big fat lie. Inflation is easily right now between 7 and 30%. Easily. Again, depending on the industry. Energy will be more towards the 30%. Remember, inflation is still rising. This is just the beginning of the year. We're just feeling the impact now. Guys, listen to what I'm saying. We are literally just feeling the impact of the measures that were put in place now. And they did the risk, so they're crashing the economy on purpose. It's a controlled crash. It's a controlled demolition. You understand? You understand what I'm saying? So now let's go back to the article. So BT slaps millions of customers with 9% hike in charges on phone and broadband bills. So right there, in order for them to meet, where is it? So in order for them to meet their profitability, their earning forecast, they are increasing their prices, which is where we got inflation from. So essentially, we're paying for the losses that these people got, which doesn't make sense because you should only increase your price if uh, the fundamentals of the product have changed. If you've had to make tweaks to the product itself or your service that result into uh, that resulted into a price increase. Now I know they will say, oh yeah, but if they've had to pay an increase in price from for a product within their supply chain, then of course the next company as well will increase price. Well, if you trace it back, someone increased price first in order to meet their profitability target. You understand? Because they always want to bamboozle us with nonsense. But if you think about things critically, it's so simple to understand exactly what's going on. Inflation is basically a tax, a hidden tax on the people by the controllers of production. The people that control means of production are basically increasing price in order for them to meet their earning target. That's essentially what's going on. And now you have the banks increasing rate, which is putting pressure on a lot of these companies, because trust me, these companies have debt. They've got they've got assets and they've got liabilities. So they have to pay their bills. A lot of them have credit card as well. You understand what I'm saying? So their borrowing has gone up, and these companies, they spend huge credit card. They've got millions in their in credit, millions in credit. You understand what I'm saying? So they have to meet a lot of these uh, obligations. So even more reason for them to increase the prices. You understand what I'm saying? So the best thing that the central bank can do is to reduce rates to control inflation. However, they're increasing it and hoping inflation would come down. But it's not gonna happen that way. The more they increase this rate, the more inflation would rise. But what they're telling us is they have to increase rates to bring inflation down, which clearly isn't working. Because if you look over to the counterpart in the East, what they're doing is they're reducing rates. If you look here, Hong Kong stocks become an oasis of green in a sea of red week in review. So right here, China reported Monday that the country's GDP grew at a better than expected 8% in 2021, though Q4 GDP disappointed at only plus 4%. So overall in 2021, their GDP grew by 8%. Remember, when everyone shut down, China did not lock down. The eastern countries, they were a lot of them were still fully operational, still producing, because they've more or less automated their market. Remember, the fourth industrial revolution is not coming out of the west; it's coming out of the east. And in Q4, they made uh, they made 4%. So it says here, monetary policy easing was the key word in China this week as the People's Bank of China announced cuts to the medium-term lending facility, reverse repos, and the loan prime rate, confirming a looser stance in the new year. The Biden administration announced that it would be looking into the national security implications of Alibaba Cloud Services in the U.S. However, the company's U.S. cloud business represents a negligible portion of the company's revenue. You see, while the West is increasing rate, the East is reducing rate, which is actually working better for the economy. Which is why, if you look at this, they need to reduce this in order for this to come down, because this is going up because the people that produce that you know pro- produce the goods and services, their bills and obligations are not being met. You understand what I'm saying? And in order for them to meet uh, those bills, those liabilities, and those earning target, they have to increase their price, which is where inflation comes from. You understand what I'm saying? So let's move onto uh, crypto news. Right here, we've got Feds opens debate on CBDC, takes no policy stance. The Fed was careful not to take a side in its central bank digital currency white paper Thursday, which the industry has been waiting for since May. Guys, now we know central bank digital currency, they're all ready. Again, you can't tell me, the developing nations are launching central bank digital currencies and the West doesn't have one yet. No, they do. It's by design. those developing countries, the world power, the powers that's ruling the world, they are now in the developing markets to develop those first. That's where they put in a lot of their uh, investment into. So that's why we're seeing these developing countries rise first, and the Western country, the already developed country, will rise after. They've all done this, everything is ready, they've got it. But we know if the Fed, if the Fed have to bring in CBDC, the UK central bank also, if they have to bring in CBDC, because the UK central bank is more or less doing the same thing right now as well, right? We looked at the House of Lords and uh, the evidence they requested from the committee that's looking into digital pound sterling, and the House of Lords as well. It's sort of the same stance, because if they have to approve anything right now, they have to work on regulations, and they don't want regulations. They don't want regulations, so we can have days like this, red days like this. You understand what I'm saying? The crypto market, couple days ago, it was at almost 2 trillion, or over 2 trillion. But look at this now, we're dropping down. Bitcoin, phew, dropping down. You understand what I'm saying? So we need to understand they they're kicking the can down the road, so they don't have to regulate the market. Because if they regulate the market, a lot of the scamming and the hacking going on would not be happening. You understand what I'm saying? Because if they happen, these exchanges will have to reimburse the customers, because it's the responsibility of the exchanges to basically make sure there's security in place that stuff like that don't happen. And it's things like that that regulation will enforce. So the hacking is happening because the exchanges are the ones doing it. Guys, you need to understand how the world works. Everything is a scheme. It's a scam. They'll eat you. And if you're one of the unlucky ones they eat, they'll eat you, man. It's dog eat dog out here. So if you're getting into investment, understand, nobody cares. Nobody's there to look out for you but yourself. It's your job to do your own due diligence, do your own research, use your common sense, use your logic, observe your environment, and ensure you're doing what's best for you and your family. So, moving on, we've got AI powered bots may be the answer to the great resignation and war for talent. Guys, again, we know all the mandate for the jab and all that, they're driving people out of work. And those who are taking it, they will be out of work as well, regardless. So whether you take it or you don't take the jab, it don't matter. You're going. We're all going. We're all done. You understand what I'm saying? So when you start seeing article like this, just know everything we're talking about is exactly coming to life. They're ready. They're ready. Last year, they laid the foundation. You know, interoperability of a lot of the networks and blockchains and DLTs. We know ISO 2002 standards. So, guys, let's not let's not sleep. All the puzzle pieces are out there. It's up to us to do the research and understand economics and politics, because once you understand those two, you know that politics is just uh, a debate on how the economy is run, how the flow of money move from one place to another, how the flow of goods and services move from one place to another. That's it. And lastly, guys, here we've got blockchain meets activity tracking project rewards healthy habits with token. Medical professionals have developed ways to track and store personal health data securely within blockchain. Guys, we know this is what network like Cardano are gonna look into. This is what they're gonna deal with, because we know, guys, they are planning to automate everything. All the uh, current human labor. They're trying to minimize it to maximize profit, and they're not looking to transfer the benefit to the people. They're looking again to enrich themselves and empower themselves, and to further create uh, divide between the wealthy and the poor, the rich and the peasant. You understand what I'm saying? So, guys, let's understand that uh, what's going on right now is nothing but an elaborate scheme, you know, because when you look and think critically about what they're doing, you know that it's nothing but a scheme. It's all a scheme, you know. Inflation is to do with manufacturers of goods and services increasing their prices, and increasing their prices because they have liability and bills obligations to meet, and also to meet their earning targets, their profitability. Money is what motivates them the most, and if that means they have to charge you more to get that, they will get that. Guys, appreciate you all listening in. Let's focus on these things. Share with your friends, family, and loved ones. I appreciate you all joining me on this one. Peace, love, and light to you all. Catch you on another episode. Peace.